So what is the current market's expectation for the CPI data report that is going to be released tomorrow? What's going on, team? It's Ricky here with TechBud Solutions, here to keep today's video super short and sweet. First, I'm going to be live streaming the CPI data report tomorrow. All I ask you to do is get this video to over 2,000 likes, drop a thumbs up, subscribe to the channel, and turn on your post notifications, because if you don't, then YouTube will not alert you when it is that I go live. So let's go ahead and jump right into it. What is the current market's expectation for the CPI data report on February 14th, 1 hour before the market opens? It is 6.2%. That is the forecast. That is the expectation. That is what is currently getting factored in. Now, what exactly does that mean? I'm going to explain that for you guys. First off, what does the CPI data report even mean? CPI data report is a monthly report where they track inflation. Is inflation going up or is inflation going down? I've broken down in numerous videos how to read the CPI data report. You can feel free to go on the YouTube search bar after this video and YouTube search CPI data report Ricky, and then there should be one that explains to you exactly how you can actually read the report. It's actually fairly simple. So the current inflation rate is 6.5%. So that means that if the market's expectation is 6.2%, then that is what's currently being factored into the market right now, meaning that if we're at 6.5 right now, but the expectation is 6.2, this isn't like the real estate market where it factors something in after the fact. I mean, it will, but even prior to, this is kind of like the infamous thing about the stock market, is it factors things in advance. It has market expectation. So this is what's currently being factored in right now. So the NASDAQ trading at where it's trading at, if we look at this on the 1 hour time frame, I mean, we're trading above the moving average, we're trading above the EMA. Ever since January 6th, we've been indicating signs of an uptrend. The market expects inflation to go down. That is all you really need to understand. From 6.5%, our current inflation rate, they expect it to be down to 6.2%. Now, what happens if the CPI data report comes in higher? Well, it's not rocket science. Let's not overcomplicate it. Most likely, if inflation comes in higher than what is currently being factored in, the market will react in a negative way because it's not already factored in, right? If the CPI data report comes in actually lower than expected, then again, that's not factored in either. So therefore, the market will most likely react in a more positive way, right? This is why it's so important. One of the main things that I would kind of encourage you to look out for is, first, I'm going to be live streaming it here on YouTube for free. So just make sure you subscribe and we can kind of watch the market react together. And I'm actually going to break it down. So during that live stream, we're not just going to be like, oh, look, the market's going up or the market's going down. I'm going to break down the report and show you exactly what it was that was being reported that caused the inflation rate to go up or down. But just to give you an example, you can go to BLS.gov, which is where this report is actually being released. It's the Bureau of Labor Statistics, and it's a public free website. And then it provides for you this PDF, right? The really cool thing about this PDF is that it shows you based off of the past 12 months, how much either inflation has gone up or how much inflation has gone down. Now, my concern is that inflation has consistently gone down from 9.1% to our current inflation rate of 6.5%. My concern is that it's not going to continue to go down every single month like we've experienced for the past couple of months. And that's where I feel like there's a lot of uncertainty of what's to come. Maybe not in February, but maybe in March or April, I could expect that maybe the inflation rate might come in hotter than expected. And that's kind of the thing that I'm kind of just waiting out for, especially as the Federal Reserve begins to reduce their balance sheet. But again, that's for a later video. All I want you to understand about the CPI data report is these line items. This is what's being pretty much reported. So it has food, it has energy, it has overall just commodities, it has new vehicles, medical care services, all this kind of stuff. The thing that you'll hear often people talk about is CPI and then core CPI. CPI is everything in this list. Core CPI is everything excluding food and energy, because the Federal Reserve understands that they cannot control the prices of food and energy as, again, they're external variables, right? But one of the things that you really want to pay attention to is kind of asking the question, well, as of the last reporting and the past couple of reportings, what has seen the highest rate of inflation and also the biggest declines? But you can see that in the month of December, which is our most recent reporting that was released in January, you can see that in the month of December, it was energy. Energy saw a pretty consistent decline in the actual inflation rate. So it took a big toll on bringing down inflation for the month of December that was reported in January, right? We went from, I think it was like 7% to now 6.5%. So with the current market expectation of 6.2%, I mean, we're expecting inflation to continue to drop. So that means that everything that has been reported here will have to continue to see a decline for us to be able to hit that 6.2%. Now in February, I'm not too concerned. I'm not sold on the idea that inflation is going to go to 6.2%. But I would say that the months after February, I would be very, very careful, being super aggressive, knowing that the Federal Reserve is going to be reducing their balance sheet, and also knowing that we've consistently seen a decline, and that decline will most likely come to a standstill as we begin to therefore then struggle to make consistent declines on this inflation rate. And again, I can talk a little bit more about that in tomorrow's live stream, which is why I think it's going to be so important for you to tune on in. I just wanted to make sure that you knew two things: that tomorrow, the CPI data report, what the market expectation is, and that's 6.2%, and that we currently sit at 6.5%. So the market is expecting inflation to go down. And then the second thing is, if you don't want to depend on me, I respect that. I wanted you to have access to this website and to know where the actual CPI data report is being released, and that's at bls.gov/CPI. And again, this is all available for free, so make sure that even if you do tune on into tomorrow's free live stream here on my YouTube channel, I want to make sure that you have this website put up on your tabs as well, so you can have access to it as I break it down through that live stream. So just wanted to make sure that you guys were aware. If you have any questions about what we talked about today, feel free to send me a direct message via Discord or via Instagram, and that's the first or third link in the description down below. Friendly reminder, I do trade live every day with my Learn Plan Profit group, and that's that second link in the description. So after that CPI data report, I will be trading live exclusively with our LPP team. So again, if that's something that you want to experience, make sure you click that second link, sign up, save $150, which is our biggest sell, and I'll see you tomorrow at market open. I hope that it earned a thumbs up. Please consider subscribing. And again, make sure you get this video to over 2,000 likes and you turn on your post notifications, because I would love to have you for that CPI data report tomorrow, 1 hour before the market opens at 8:30 a.m. Eastern time. Like always, let's make sure that we end the year on a green note. Take it easy, team.